Welcome to AI Finance Daily, the show that makes AI economics make sense. Here's something worth your next 5 minutes. The AI concentration risk. Why 80% of retail investors own the same 5 stocks. Imagine you hold a portfolio that looks alarmingly like a game of Monopoly. You know, the one where you just buy Boardwalk, Park Place, and hope for the best? Well, that's the reality for many retail investors today. Approximately 80% of retail portfolios are concentrated in just 5 stocks: Nvidia, Microsoft, Google, Amazon, and Meta. But how did we get here? This isn't just a quirky coincidence. It's a rampant manifestation of herding behavior wrapped in a shiny AI bow. Investors fear missing out on the future, so they pile into the hottest names in tech without considering the risks that come with it. As of now, Nvidia stands at approximately $189, Microsoft at about $384, and both have seen astronomical growth recently. But what happens when the music stops? Think about what happened in the late 1990s during the dot-com bubble. At that peak, 40% of US stock market capital was concentrated in just a handful of internet stocks. When the bubble burst, portfolios tanked overnight, with the Nasdaq dropping about 78% from those highs. A similar scenario could unfold today, where investors holding their hot picks may witness a staggering 40% drawdown, cutting their wealth in half almost overnight. Why are smart people still holding on to these tech giants despite the looming risks? Well, it's simple. The bull case is compelling. These companies not only dominate their sectors, they're often seen as irreplaceable, driving AI and digital transformation across industries. Analysts suggest these stocks may continue to soar given their significant investments in AI technology. But all the optimistic forecasts must be overshadowed by a crucial question. How do you quantify the risk? Here's where it gets fun. You aren't just betting on one company or even one sector. You're essentially gambling on the entire narrative of a technological future that is, confusingly, both ripe for reward and riddled with hazard. Jumping on the AI train may feel like a wise investment, but overexposure to just 5 players makes you vulnerable in ways you're not even considering. So, what does this mean for your money? If those tech shares drift downward, will your entire portfolio follow? One scenario is a rapid downturn. Investors could panic, leading to a mass sell-off. The ripple effect could decimate your gains as everything tumbles together. That's the reality of concentration risk. You might wake up one morning, and instead of profits, you're faced with massive losses. What can you do then? Diversification is a start, but let's be real. Simply sprinkling a few random stocks into your portfolio won't protect you. Consider looking at sectors that have lagged behind. Energy stocks, for example, may not be glamorous, but they could provide a cushion. Additionally, explore defensive assets like bonds or commodities. They often hold value in turbulent climates. Another approach could be strategically trimming your exposure to those 5 tech titans. Consider selling off portions as the sentiment shifts. This way, you protect some of your gains and mitigate the inevitable volatility that accompanies concentrated positions. Remember, though, this is a risk scenario, not a certainty. The market may continue to rally, and these tech titans could thrive. But as history has shown, and as the bubbles of the past remind us, concentration can lead to devastation when the tide turns. So next time you hear about the next AI marvel promising stellar returns, or ask yourself, am I putting all my eggs in one very tech-savvy basket? This is a time to tread carefully, acknowledging that rational analysis often misses the psychological dynamics at play in investing is crucial. The figures discussed here are drawn from publicly available data. Always verify before making any financial decision. This is educational content, not financial advice. AI Finance Daily. Thanks for listening. If this episode added something to how you think about AI and money, follow the channel. There's a lot more where this came from.